Thank you, Dr. Kugler. So as not to show favoritism to any of these three outstanding nominees, I have one question for each of you, and please be as brief as you can so we can keep that within the 5 minutes. Governor Jefferson, left to right, we've seen three major bank failures in the last 4 months. As Vice Chair Barr noted, these three banks failed, quote, following substantial deposit overflows over poor management of interest rate risk and liquidity risk. The rapid collapse of these banks brings into focus issues of financial stability and lurking risks to our financial system. My question, Mr. Jefferson, Dr. Jefferson, what risks are you closely monitoring? How should we think about those risks in the economy more broadly?
Thank you, Senator, for your question. You're correct. Recently, we did experience a period of banking stress. As I look ahead to the economic outlook for the third and fourth quarter, I am monitoring very carefully the possibility of additional tightening from the banking sector with respect to credit. It represents a downside risk for the economy, and I'm watching that very carefully. With respect to financial stability concerns, as you mentioned, liquidity risk is something that certainly we would want to monitor along with banks' provision of interest rate risk. So these are factors that we must continue to monitor, along with the rapid potential flight of deposits in banks that have a structure where they depend on a large share of uninsured deposits. In addition to that, I'm also looking at quite carefully weakness in the commercial real estate sector. As the pandemic has had an adverse impact on that sector, it's certainly the case that loans that are based in commercial real estate are subject to additional risk. And finally, Senator, there's cybersecurity, always something that must be monitored so that our financial system is robust to potential bad actors who could compromise our financial system.
Thank you, Governor Jefferson. Governor Cook, your thoughts on the state of the economy. 11th straight month, inflation fell, now registering at 4%. The Fed paused rate hikes this month, as you know. Prior to pursuing rate hikes, they'd raised benchmark interest rates 10 times since March of 22. How do you view the state of the economy? Are there key economic indicators that give you hope that the Fed's taking the right steps necessary to get inflation down to its target 2% number?
Thank you for your question, Senator. Is it on?
Yeah.
Okay. Thank you for your question. We are committed to getting inflation back down to the Fed's 2% inflation target. The inflation rate peaked in 2022 and is coming down, but we are not there yet. It's not back to its 2% target. With respect to risk associated with inflation, there are several, including global commodity prices, the resurgence of global commodity prices, and supply disruptions. Those were huge, and intensification of of Russia's aggression in Ukraine. These were factors that were prevalent during this pandemic-related economy. On the front of economic growth, certainly there's a risk that economic growth could slow. Interest rate hikes work to tighten financial conditions and therefore to limit aggregate demand, to bring supply and demand into better balance. That's where the inflation is coming from. So there is a risk there. But certainly we hope that no slowdown, that if there's an economic activity slowdown, that there is not one that leads to a recession.
Thank you, Dr. Cook. Dr. Kugler, you're an expert in labor economics. You've conducted extensive research and analysis into labor markets, examining how training programs help young workers maximize their God-given potential. That we are working the Obama administration, chief economist, Department of Labor, serving as the executive director of the World Bank. All those things make you immensely qualified for this. Share with us how your experiences have shaped and we talked in my office. I know we didn't get to some of your background that I wanted to explore, but tell us how your experiences have shaped your view of monetary policy, particularly in light of the Fed's dual mandate.
Thank you. Thank you very much for that question, Chairman Brown. I would say both my personal and professional experiences have shaped my view of the dual mandate, of the need to bring down inflation, and the need to keep maximum employment. I spent my childhood in Colombia, where in the late 1970s and early 80s, inflation was very high, hovering about 25%. This is something that you saw and felt in everyday life when you went to the grocery store, when you went to buy anything, and you had to make decisions as to what to buy or what not to buy. In that context, too, unemployment and precarious employment were very evident, and it showed how that could get you into poverty. The lack of employment and the precarious employment left many homeless. That was a reality back in Colombia, my parents' home country. So this drove me to study economics, and this certainly drove my interest in economics. And I ended up in my PhD program at a top program in the country to study macroeconomics, to specialize in macroeconomics and labor economics. Those were my specialties. During that time, I was lucky enough that the Federal Reserve gave me a fellowship as a graduate student. I was a visiting scholar at the Federal Reserve Bank of San Francisco, where I spent time and I had an office in the research and statistics department. Now, I have had a 25-year career, as you mentioned, Senator, where I have studied, I have produced original research, but I have also done a tremendous amount of policy analysis, looking at labor markets and also firm productivity. Both of these areas of research clearly inform the employment side of the dual mandate, as well as the price side and the stability of prices that the Congress has asked the Fed to fulfill. I truly believe that both sides of the mandate are very important. And one side of the mandate may become more important at some points, and the other side of the mandate may become more important at other times. Right now, the inflation side is critical. It is very important to continue to bring down inflation to its 2% target. I'm committed to that. I believe firmly that those that are hurt the most by high inflation, but also by high unemployment, are always the most vulnerable. I have seen it with my own eyes, both when I was growing up in Colombia, but also here in our great U.S. economy. So thank you very much.
Thank you, Dr. Cooler. Senator Scott.